Jerome Powell just took out a bazooka and fired not one, not two, but 3 shots directly at the heart of the US housing market today. And this is sealing the deal. This cements the US housing crash because the Fed and Jerome Powell announced that they're attacking inflation with the largest interest rate hike since 1994. Specifically, the Federal Reserve announced that they're raising the key interest rate by 3/4 of a point. That's 75 basis points, a triple rate hike. And not only that, Powell signaled that more rate hikes are coming later this year. As a consequence of these interest rate hikes and the Fed tightening monetary policy, we are seeing mortgage rates surge out of control. In the last several days alone, the 30-year fixed mortgage rate went from 5.5% all the way up to 6.3%, double where it was at the end of 2021. These higher mortgage rates, to go along with record high home price appreciation, have combined to make the US housing market the least affordable it has ever been in US history. And so buyers are on strike. They want nothing to do with this grossly inflated housing market, and the ultimate result is going to be this. 2 main things. Number one, we're going to see skyrocketing inventory on the US housing market over the next 3 to 6 months. You're not going to believe how many homes are going to be sitting on the market with no buyer. But not only that, number two, we're going to see massive cuts in prices and reduction in values. A little later in this video, I'm going to tell you where the inventory is going to go up the most and how big these price cuts are going to be. But before we get into that specific data, folks, I want you all to understand just how dire this situation is. It's not only me on the Reventure Consulting YouTube channel saying there's going to be a housing crash anymore. It's mainstays in the industry preparing for a major crash. Just take a look at what Redfin, the online realtor, just did. They laid off nearly 10% of their workforce earlier this week, and their CEO said this in an email to his employees. He said that May homebuyer demand was 17% below expectations and that Redfin doesn't have enough work for their agents and support staff. He went on to say that mortgage rates increased at the fastest point in history and that as a result, the US housing market could be facing years, not just months, years of fewer home sales. Meanwhile, the chief economist for Freddie Mac, the government organization that buys mortgages, just tweeted this: the US housing market is at the beginning stages of the most significant contraction in activity since 2006, everyone, the peak of the previous housing bubble. And to top it all off, not only is Jerome Powell hiking rates, not only is Redfin laying off employees, not only is Freddie Mac predicting a slowdown, we are now seeing real estate investors jump ship and exit the housing market. Redfin just reported that investor home purchases slumped 17% from the pandemic peak in the first quarter of 2022. And those purchases dropped off the most in hot Sunbelt housing markets like Atlanta, Jacksonville, Charlotte, Vegas, and Nashville. And so in case you were someone who was still on the fence about whether the housing market was crashing, maybe you were still bullish about the future direction of the housing market. I see the financial guru Dave Ramsey still telling people to dive into the housing market. Well, you better wake up. You better not listen to Dave Ramsey because the writing is on the wall. We're in the biggest housing bubble of all time and it is crashing down right before our eyes. And those who are patient and wait things out and wait for inventory to spike, wait for prices to go down are going to be rewarded because values have very far to fall. The reason I know this is by looking at a long-tested indicator of housing market overvaluation, and that is the relationship of home prices to income. And we can see that in 2022, Zillow's typical home value of $350,000 was 4.8 times higher than the median income of $73,000. This ratio is about 40% above the long-term average, the long-term 50-year average of 3.3x. So it's very reasonable to expect that home values in America are going to crash down to the historical level of what income suggests they should be. Make sure to note, the only other time in US history where home values have ever surged this high relative to incomes was 2006, 2007 at the peak of the last housing bubble, and they then proceeded to crash all the way down to the long-term average. And the way that these price declines are going to be achieved is through a massive, unprecedented surge in inventory. May 2022 already registered the largest monthly increase in inventory on record, according to data from Realtor.com, over 100,000 extra homes on the market in active inventory. I believe we're going to see in June an increase of 150,000, and we're going to see every single month until November a 100,000 plus increase, which means that I'm predicting by November 2022, in only 5 months, the inventory on the US housing market is going to be back to pre-pandemic levels. And while some of you might be skeptical about that, remember folks, what we looked at so far in this video, number one, the mortgage rates are so high that regular home buyers can't afford homes. Number two, the investors are dropping out of the market left and right. Who's going to be the end buyer? Answer, there is none, and as a result, inventory is going to skyrocket and ultimately cause a big increase in price cuts. Now, here's an important question that a lot of you need to ask yourself, and it's this: how is my city, how is my housing market going to respond? Because looking at the national averages of the US housing market are helpful, but when you look under the hood, like I do so often on this channel, you realize that different cities around America are in different stages of the crash, and we're going to see prices crash first and crash hardest in certain cities in particular. I believe they're going to be the ones in red on this map, where home prices are the most overvalued according to the Reventure Consulting home price model, a system that I developed to tell you how much your housing market could crash by. A place like Boise, Idaho, I think is going down by 29% from peak to trough. My predictions have Austin, Texas going down by 35%, Phoenix, Arizona going down by 27%, Tampa, Florida going down by 27%, Atlanta, Georgia going down by 25%. And a general rule of thumb to follow is this, so you can understand how in the crosshairs your city is. If you live somewhere that was part of the real estate boom over the last 2 to 3 years, where all these people moved in and all these homes were built and where home prices went up 50, 60, 70% in 2 years, there's a great chance that your city is going to get smacked in this housing crash. And as far as when are they going to go down, what are the cities that are going to crash first? Well, a good way to answer that question is by looking at the ones with the biggest surge in inventory. Data from Realtor.com shows that inventory is already exploding in markets like Austin, Boise, and Colorado Springs, where there's more than a 100% year-over-year increase. Other markets with big increases include Raleigh, Phoenix, Lakeland, Florida, Stockton, California, Salt Lake City, Utah, Spokane, Bakersfield, Nashville, Cape Coral, Sacramento, Northport, Florida, Riverside, California. And the inventory is going to keep building and building and building and building over the next several months, because not only are buyers dropping out, we're going to see even more sellers come to list their homes, especially real estate investors, because I talked about earlier how they're buying fewer homes. Well, that's step number one in how investors are going to contribute to the crash, is they're going to buy less. Step number two is that investors are going to start liquidating the holdings that they have. Because according to the US Census Bureau, back in 2018, there was 18 million single-family homes owned by real estate investors in America. It's likely that today that figure is closer to 20 million. And what's amazing is that since investors own so many homes at nearly 20 million, we only need a small share of investors to sell to crash the market. Like if only 5% of existing investors sell their homes, that would add 1 million new listings to the US housing market, more than doubling the current level of inventory according to Realtor.com. And I'm going to talk more about this real estate investor fire sale in the future video. So if you want to see that, make sure you're a subscriber, make sure to smash the like button. But folks, it doesn't stop there. Just as investors are going to be fire selling their properties to get out before prices go down, we're going to see the tremendous backlog of foreclosures that has been building and building and building during the pandemic release onto the market. And currently there's about 650,000 homeowners in serious delinquency who haven't paid their debt service in more than 90 days. These 650,000, they're either going to be foreclosed on or forced to sell their home on the market in short order, which is going to further add to the inventory increase. Oh yeah, and by the way, on top of this, US home builders are currently building 1.6 million new homes and apartments, which have been delayed due to materials and labor shortages. Well, those 1.6 million new homes and apartments, you guessed it, they're going to start to be delivered over the next 6 months as well, creating the perfect storm for the most epic housing crash in US history. Those of you who waited, those of you who were disciplined and didn't buy at the peak of the market, you are going to be rewarded very, very soon, in my opinion. You're going to have your pick of the litter. Inventory is going to be way up. Prices are going to be down. The only question is, do you want to wait it out for lower mortgage rates? Because while mortgage rates have surged due to the Federal Reserve tightening monetary policy, I think it's likely in the next 1 to 2 years, mortgage rates are going to crash. That's because the US economy seems to be heading into a recession. And over the last 5 recessions in US history, every time mortgage rates have gone down, on the order of anywhere from a 1% decline to a 4% decline. The reason that mortgage rates go down during a recession is because interest and treasury yields tend to go down as well. And it's likely that as the recession plays out and eventually gets worse, at some point the Federal Reserve will stop the tightening and start getting into more accommodative monetary policy. Now, one variable that you all need to consider in this this projection of future mortgage rates and interest rates is what happens to inflation. Inflation is raging right now, 8.6% year over year. Are we going to continue to see that inflation into the future, or is that inflation inevitably going to peter out or end in a deflationary episode? And I think it will, because put simply, Americans don't have enough money to sustain the level of inflation we're seeing right now. The savings rate in today's economy is near a record low. Consumer sentiment's near a record low. We're already seeing people cut back. The end result of that is going to be, in my opinion, a deflationary crash that's going to cause prices and interest rates and mortgage rates to go down. It's very important to remember that the 1970s inflation, which lasted 10 years, was a very different animal, because back then Americans had tons of money. The savings rate was 10, 11, 12, 13, 14% per year. So Americans had enough money to sustain the high prices, which kept the inflation going. Meanwhile, today Americans don't have enough money. So that's why I believe that Jerome Powell's rate hikes and his quantitative tightening right now, while it's needed to combat inflation, the end result, the long-term result, is going to be a deflationary episode, which means ultimately that I'm going to wait to buy a house. I see no rush to buy right now. There's no pressure from a buyer perspective. You're seeing inventory build, you're seeing prices go down. Let's let this play out over the next 6 to 12 months, because there's going to be some epic buying opportunities for those of you that have been patient. You're going to want to have the cash on hand. And of course, I'll be providing you with updates 3 times a week on this channel with all the real-time data regarding home prices, inventory, how the crash is playing out. So make sure you're subscribed, or make sure to smash that like button so you can see this content into the future.